My name is Benjamin Poole, and when I was 23, I gave my life savings to a broker who lost it all. But this taught me an invaluable lesson. I needed to educate myself to make my own financial decisions. Fast forward 20 years, I am no longer living paycheck to paycheck, and I want to share everything I've learned with you. Welcome to Financially Fit.
Welcome to Financially Fit. My name is Lawton Ho, and I'm joined by
Benjamin Poole. I thought this was my show.
This is
Welcome to Financially Fit. My name is Benjamin Poole with Lawton Ho.
What's going on, guys? Listen, I'm the only one who's fit here. Okay.
That's right. All right.
So,
So we got a good show for you guys today, as always.
As always, all right, this guy's just messing with me. I will be monitoring the live chat. Please leave your questions in the live chat on YouTube. I have it open and I'll be watching it. But I'm going to first be answering questions that members left for us on the member dashboard.
Perfect.
Every single Tuesday around 11 o'clock, I make a post in the Financially Fit sections of Verified Investing's member dashboard, which you can access for free.
For free.
For free, and you can leave your questions, and these are the first ones I ask. Yep.
Yeah, that's right.
You ready to get started?
Let's go. Here we go.
Okay.
What's the first one?
You can stay over here.
Okay.
Christopher wants to know. Well, Ryan, first of all, Ryan says, thanks for all your hard work and excellent updates throughout the day. Have a great one.
Oh, thanks.
Not even a question. But
no, that's great.
Thank you.
Yeah.
All right. Christopher says, hi, Ben. Can you please tell me how you and Dr. B's Trader's Edge crypto service differs from Gareth's Smart Money crypto service? Is it the same concept educational-wise with just different trade alerts? Thank you for all the hard work you guys do at Verified Investing and helping people learn about trading and making profits.
Awesome. Well, first off, there are two people in the service that are constantly looking at different charts. We also look at different market caps than Gareth does. We actually have a Q&A as well, so a live question and answer that allows our members to go in there and ask questions for us, go over charts that they're interested in, so that way we can see how the charts are playing out. And then we also leave our chat, well, at least I do, I leave my chat open. So when I post something, I post a video or a chart or an entry, if you guys have questions on that particular post, we actually go in, I will go in there and respond specifically to you. And so it is quite a bit different. We are in some of the same positions that Gareth is in, but for the most part, you know, we'll give you trade setups that Gareth may or may not get in, and then vice versa. So, yeah, great question though. Thank you.
Yeah. And I think that's really cool because you're able to ask questions about a chart you don't understand, and the Q&A is also a fun thing that we like to do.
Yeah, it's really awesome.
Okay, next question. Okay, you're going to want to head to your charts.
Okay.
Libertas 1791 says, SE, a target of 88.24, still a good potential? Question mark. And I'm guessing this is something that we had talked about previously because I see that chart there.
Okay, SE.
Is 88.24 still a good target?
I think I put this out in a trade alert or a post, so that's probably what he's referring to. Yeah, so the nice thing is you've got this nice breakout. You had this price consolidation right here. And so as soon as you break out, you could get a retrace, basically what's called to the scene of the crime. And at that point, you can get that rebound. Okay, so now I'm going to go ahead and see where some resistance is at to see if that's a good spot for an exit. So $84.65. I'll pull this up so that way you guys can see what I'm looking at. So you've got this gap fill right here. Well, this was a previous gap fill at $84. It is no longer. So $88 is going to be, yes, your next level of resistance. So a lot of people think that this would still be a gap fill, but price got above it and then shot below it. But since it's on the outside of that red bar candle, this is no longer a gap fill. And so people have already stopped out. So if it gets up to this level, it will get rejected. It does have a little bit of work. As you can see, it's consolidated above this level, or starting to consolidate, above this level right here. So the more it consolidates, the higher it's likely to go. So I still like the 88.13 level for a potential exit on this. Doesn't mean that you're not going to get some pullbacks right off of these levels right here, but ultimately I really like that gap fill. And the gap fill could actually act as a good resistance point, so you could enter a possible short there as well for a pullback.
Cool. Next question. You can come closer, I guess.
What's
if
up?
you want to. What's up? So Dom is asking, saying, hey, Ben and Lawton, what is the best way to manage a trade that hasn't gone your way? Do you ever go long and short to hedge a position, or would you rather DCA to lower your average? Thanks in advance. Keep up the good work.
Most brokerages don't allow you to go long and short unless you're going to do it like with options. So it really depends. The one way you can manage your risk is by making sure that you have support and resistance levels. So for example, going back to the SE, I'm going to slide this over so I can kind of give you an idea of what I'm referring to. So I believe when I gave this kind of idea out, I said, all right, so here's the potential, right? So you could either short it at this level because it's a double top. If you short this, any close above would be a stop out. So at that point, you just stop out and know that, all right, I took the risk. I have a small risk factor. Any close above, all right, I stop out with this downside potential reward of right here. So if you do that, you minimize the amount of risk that you have. On the other side, if you break out, you could put, if you enter it here for a long position, you would just do the opposite and put a reversal. If it closes below, then you would stop out here. So dollar cost averaging is incredible if you do it correctly, right? You got to make sure that you're lining yourself up with support and resistance levels. So if you were to enter a long position, let's say SE is coming down here, that's an arrow, and you decide to enter here. Let's say you do a 1 to 2% position. All right, well, you know you've got support here. If it drops here, a lot of people will add because you've got support here. And then add a little bit more here, and then add a little bit more here, and then add a little bit more here. And that's fine. The problem is now all of a sudden you've got a 10 to 15% position. And so then if it gets down here, you're out of the money big time. And so when you're dollar cost averaging, if you're doing it for a swing trade, you actually want to wait till you're about like 10, maybe 15% of the money, and then add right here. So you don't necessarily need to wait here, but add at a level where it's pierced a couple different support levels, and then add where you've got additional confluence right here. So that way you can make sure that when you're dollar cost average, you've given yourself at least an opportunity for a small bounce to break even, so that way you could possibly take half off the table. So it really depends on your long-term strategy, whether dollar cost averaging makes the most sense. Are you doing it with a swing trade, a day trade, the percentage that you have for your portfolio size, how often you've already done it. So any of the methods can work. You just have to make sure that you stick with that strategy throughout. And then when it gets to a certain point, you got to make sure you cut it, right?
Gotcha. Yeah, and Robert saying, sup chat. Hey, Robert.
What's up?
Leave some questions for us, and we'll definitely take a look at them. Okay, next question. Upriver Rafting asks, is there a size of company or volume that you would not trade? If yes, what is your cutoff for market cap and volume within what time frame? Good question.
When you're doing more of a swing trade, I don't have like 500 million to, a couple trillion would be, the 500 million would be the least amount. And then probably for volume, the higher the volume, the more liquid, the easier it is to get in and out of a trade. And so for a swing trade, you don't need quite as much volume. So under 1 million shares, 700,000. If you're day trading, now you want to stick with, as long as you manage your risk, you can trade any of these, right? So if you go under 500 million, but you're going smaller with your risk, then you could trade those. And even if it's less than 1 million shares, you can still trade it. For me, I like to stick with the bigger companies and trade 1 million shares or more, especially when I'm day trading. So
makes sense. Next question. In a Head and Shoulders, what percentage can one shoulder be above the other? Or does it matter? The monthly GPC chart would be an example. Using candle bodies, they're 11% apart, and using candle wicks, they're 15% apart. GPC.
All right, so on the daily, he said daily, right?
Monthly.
Monthly. Okay.
Monthly Head and Shoulders. Yeah. So is it too far apart?
All right, so what I'm looking for on a Head and Shoulders pattern is really a clear pattern. And doesn't mean that this isn't going to work out, but let me show you what I'm seeing in here. Right, so you've got this cool little Head and Shoulders charting tool. I want you to notice something when I pull this up. What do you notice? The first thing I notice is this doesn't come down and complete this. Now what you could do is really say this is the shoulder, right? And so if this is the shoulder, ultimately, then you've got the head here, and then you have your shoulder here, then you've got a good chart pattern. The height of the shoulders don't matter quite as much. If you're using this pattern, they're pretty symmetrical. Really, the key is finding out this trend line, right? So you've got this nice trend line right here. The Head and Shoulders gives you a great measured move, right? So if it's down to here, maybe your target is $80. But ultimately, what you're doing is you're waiting for a break of this upsloping trend line. So as long as you have an upsloping trend line, you know that once it breaks, the probabilities dictate there's downside move. So I don't really have an answer as far as like the overall like height differentials of the shoulder pattern, but this right here, it looks like a pretty good Head and Shoulders pattern to me.
Cool. Okay, David Stewart in the chat saying, how would you interpret the Marubozu candle on GoGo yesterday? Marubozu? M-A-R-U-B-O-Z.
I have never heard of that.
On GoGo.
What is
GoGo?
the stock ticker? GoGo?
GoGo. Marubozu candle.
Yesterday. All right.
I don't know if that's a...
Yeah, I'm looking at the GoGo chart. I don't see anything out of the ordinary. What I do notice is that you've got this really good green bar candle, which is definitely
that's a Marubozu candle.
Maybe definitely bullish. So if you were going to play something like this, you just take your fib retracement tool. I would like to go here, take this here, and then do a 618 retrace. You know, that would be my first entry for a long position. But you got to, I don't know what the news was. I don't know if this is a meme stock. So I wouldn't do anything with it. I would wait for more confirmation that there's a continuation of a move. So here's how you do that, right? So you take this pivot high right here, you draw this trend line. And so ultimately you want it to get up to this line. This is going to be a reverse of the chart. Should get a pullback. If it starts breaking up from there, then you've got more of a breakout. You wait for a retracement to the scene of the crime, and then a potential breakout. But I wouldn't do anything with this chart right now. I mean, It's just barely getting above these pivot lows right here. Well, it did, but now it's just coming back underneath. So this is still a lot of resistance. There was no confirmation.
So David says, yes, that's the candle. That's a Marubozu candle.
That's a Marubozu candle. Okay.
It's just a...
It's a wide range bar.
A big, long, green, tall candle.
I think it could be red too.
Oh, maybe that's a negative Marubozu candle.
Yeah, it's right next to it. Yep.
Okay, so next question. Paul says, I always enjoy this segment.
Awesome, thanks.
By my count, I see 13 consecutive green daily candles on Apple.
Yes.
Wow.
I know.
I'd like to think we'll see a retracement soon. Is there a good entry point for a short other than waiting for a topping tail or break of previous day low? Thank you.
Absolutely. I have a couple different levels.
Look at that.
So my first level would be the 786 retracement. So you've got this big wide range red bar. That's significant resistance. As you can see, it's trying to get into that red bar candle and push above it or push through it. So you've got a lot of sellers in there who are stuck. And so as this continues up through this, as price action continues up, they're continually buying their shorts covering, or because they went long there, they're selling. And so it's going to take a lot of buying pressure to get through this. So you want to check the volume to make sure that this volume candle, if it's a large volume candle and these are just small volume candles, that means that there's a lot of pain still, and so it's going to take a little bit longer to get through. The first level for a short, for me, would be 228.29. That's a 786 fib retracement. And then you've got the top of the red bar candle. So the high of the red bar candle, and I'm going to go ahead and mark this in here. Give me one sec. This would be a secondary level for resistance right here. So you've got that level at 230.15. And then you've got your double top. So 237.70. So those would be the levels that I would be looking at as far as like potential short opportunities. Doesn't mean that you're going to get a huge pullback, but those should be pretty significant as far as like resistance.
So we have a couple more questions and then
Okay.
we'll be done. So Kevin says, can you please take a look at Bitcoin and / AVAX?
All right, which one would you
cryptos.
prefer?
Well, he left it in our member dashboard, so we're not able to ask. But
Okay.
if you want to know what I prefer,
Yes.
let's do Bitcoin.
All right, let's do Bitcoin instead. All right, here's our chart of Bitcoin. What I really like is you've got that one gentleman said Maribozu candle, right?
Maribozu candle.
Maribozu. I don't know if that's actually what it is, but his huge green bar candle. So now you've got this price consolidation right inside of that candle. So this, for me, this is a bullish pattern. So as long as it stays inside of this green bar candle, similar to that red bar candle, right, that I was just referring to on Apple, you're going to have a lot of people in here that if you were going short, as it keeps going down and down, they're getting closer and closer to their break even, because right now they're in some pain. And then if you're long here, as it continues to go down and down, either you're accumulating more because there was a lot of buying pressure here, or the institutions are starting to accumulate as people are continuing to sell off. They think that it's losing steam, but that's actually bullish, and so I expect an upside move on Bitcoin. So I really like the charts right now of Bitcoin. As long as you don't start taking out the lows here, the low of the green bar candle, and then you've got another support level just slightly lower, and then the lower end of this right around 49,000. You start getting closer and closer to those levels, start consolidating, and then you've got further downside. But right now, the chart on Bitcoin looks fine.
Okay, cool. And I have one more question for you, but before that, I just wanted to say that if any of you guys want to have your own private session with Ben, he does offer those as a private trading session. So you can ask him all the questions you
That's
want.
right.
You can ask him about every single chart on NASDAQ, every single listed ticker, and he'll chart all of them.
That's right.
Yep.
Whatever I can fit within that 1 hour of time.
Or you could book more than 1 hour.
Or you
and
can
he
book
can
more
keep
than 1
going.
hour.
So,
or if you have crypto questions and you want chart analysis, or if you want to be able to ask questions, just join my crypto service, and then you can post in the posts that I put out. You can do that too.
yeah, that's the Trader's Edge crypto service, and I think you guys have a pretty good win rate right now.
Yep.
I don't think you have any losers yet, right?
We don't, but we do have a break even. So that
One break even,
yeah,
no
that
losers.
counts against us. But
I mean,
it's all right. It's all right. It was a head and shoulders pattern on a 10-minute chart. It ended up playing out, but not before reversing. And so we stopped out for our break even. But then the head and shoulders pattern played out. So it was quite nice to see.
So cool. Okay, this is the last question I'll ask you. what would you say to someone stuck in a short position from that they've been holding for a long time? Do you have any advice for anyone like that? Without a specific chart or anything.
Actually, I'm going to go to a GoDaddy chart, right? Like, let's say, for example, GoDaddy, because I was looking at the other day, and this thing has put in so many up days in a row, it's unreal, right? So right now, it is over 170% off of the October lows. Wow, I mean, this is incredible. What you can do in a short position, if you're stuck, if you're in GoDaddy, for example, you wait for a reversal candle. So for example, today, it looks like in GoDaddy is potentially putting in a reversal candle. So you would take this as a sign of, hey, this could be a reversal. However, it has had reversal candles, like this is a topping tail. So you would have added here. There's a couple different ways you can do this, right? So there's this thing called first in, first out. You can also do first in, last out. So if you were stuck in a trade and say your average is right here, whatever this number is, 144. And then it gets up here and it puts in a reversal candle. All right, well, your first entry was 144. Your second entry for a short can be here because you got a reversal signal. So you enter it on a 50% retrace. With reversal candles or with topping tails, the stop out is at any close on a daily time frame above the wick. So it would have closed. And so what you do, this was the second in, so it was the last in, but you can say, all right, this is the first out. So I'm taking my risk off of the table again. So you still have this entry. You tried here because you got a reversal candle. It stopped out, but instead of holding that, you're still in this position. You gave it a try. If it would have come down to your break even, you could have taken the profits off of here, still held this position, but it didn't, and it continued to rise. Then you wait for another reversal signal. So this looks like it's putting in an engulfing reversal candle. So when you get an engulfing reversal candle, you'll play it just like a topping tail. And so if it closes below the tail right here, then you would wait for a retrace to see the to the midline of the engulfing reversal candle. You would do the same thing here. You would enter here, and this would be your last entry. If it closes above the top here, then you would do the same thing. Last in, first out. So then you're taking this big of a risk for a potential reward back down to your possible break even, right? So that is how you can play it. There's lots of different ways you can play a short position. But ultimately, it really is up to you. When stocks are at all-time highs, there's no stopping it. There's no resistance. If you don't have a big reversal candle, if you don't have people stuck in there with a lot of pain, then people are just going to let it ride, right? And so, yeah, it's a tricky situation for sure.
Sure, okay. Well, that's all the questions I have for you, Ben.
Awesome. Cool, thank you so much. You guys, really, I appreciate your guys' comments and questions. The show isn't the same without you guys. So thank you so much for tuning in. Keep in mind that these charts and everything are for educational purposes only. Please do your own research, and we'll see you next time on Financially Fit.
See you later.